Okay, guys, we will get started in a couple minutes. Just getting started a little bit early for some sound check. Give me 1 second. And we are live.
All right. Good morning, folks. My name is Mitch Firestone. I am here with my partner and friend, Ryan Nocera. We're with Precision Trading Labs. We're both basically traders for about the last 11 years or so. We kind of almost hit the ground running more or less at the same time with this. So that's kind of our general history. We've been, like I said, doing this for about 11 years. My particular interests are primarily in equities and options. I do hit futures once in a while, but really equities and options are really primarily my thing. So anyway, we're going to be doing this pretty much every week at the same time on Thursdays. And we're really kind of doing this not so much as a formal presentation, but really each week just to kind of throw around concepts and for Ryan and I to talk about, kind of trading, what we're doing, what we're working on, go over some trades, talk about some new things that we've been looking at. And really just, and then most importantly, to kind of get some input and get input from you guys, what you're interested in, what symbols you might be looking at. And so that's kind of the general plan. So it's less a series of formal webinars, but really webinars that are going to certainly deliver some really useful content to you. But then also the aim is to really have it both more conversational as well as interactive. So that's kind of our general plan here. In the initial slide here, and you're not going to really be seeing PowerPoints here. I just have this here as really as a little structure. We'll be talking about trading methodologies and in a sense having a plan, then obviously translating that plan into obviously executable, finding quality risk control trades, and then obviously executing them. We'll talk about the thought process and all the preparation that kind of goes on behind the scenes and what leads up to it. In a sense, by the time you push the button, really all the preparation has already been done. And in a sense, almost finding the trades, I won't say is incidental, but in a sense, the stuff that you lead into, the thinking that you do before you find the trades, that's actually really almost the more important thing. So we're going to talk about that. We'll talk a little about the human elements of this in terms of impatience, fear and greed, the fear of missing out, all that kind of stuff that kind of gets in the way of your trading. And Ryan and I will kind of share some stories and some thoughts about that. We'll also have some just, other thoughts and some history about other stuff that's kind of gone on with us that I think you'll actually find useful, not to mention entertaining at times. Ryan at some point will actually tell you about a few years ago during Brexit, he actually traded a level in a chart that was, I don't know, either 28 or 30 years old or something. So it's, and so basically we'll kind of talk about all of that. And then of course we'll talk about execution, and I'll even show you today elements that you can kind of bring into your, for those of you who are up trading, how, in a sense, to help organize yourself, how to mechanically deal with your, sort of manipulate your platform so that you're more or less almost like a surgeon. If you know anything about, a surgeon, their scalpels and other instruments, they're really just extensions of their fingers. They aren't foreign objects. They're really just extensions of who they are. And you, to some degree, you want to get to the stage that your platform is really just an extension of just a direct translation of your thought processes. And it's not just something that you're kind of manipulating and fighting with, but really just have it almost be seamless and effortless. And so I'll kind of give you we'll kind of talk about that. I use TradeStation. Ryan uses Thinkorswim. So, we'll talk about it from the perspective and through the lens of a couple of different platforms. For those of you who use different things, obviously, we'll show you the general principles of what we're doing. And then, the commands or the structure of how you might use it if you're using TradingView or Interactive Brokers or whatever. All the platforms more or less do the same thing. Obviously, the command structure is different and the mechanics of it are different, but really they all do the same thing. And so obviously, if I show you, something today and you're using a different platform, you can do this in your own platform. You'll just have to, look at the help screen or, give them a call or, look at the tutorials that are associated with your platform. But pretty much anything that we do here in our platforms, you can do it with yours because, again, they all do more or less the same thing. So anyway, that's kind of the overarching thing that we're going to be kind of aiming for in this series that we're going to be doing here, okay? Moving on here, as I said, we would like it to be kind of interactive. And so again, we're going to kind of be looking to you to punch things into the chat as well as, punch in some symbols and even some opinions like, hey, I'm thinking of shorting Tesla. I'm thinking of going long on Monster Beverage. I'm looking at a 60-minute chart for those of you who might be, actually trading. Hey, what do you think of this? Or, hey, here's my opinion. Here's what I'm going to do. Or I'm in this trade. Where would you guys see a potential target being since these either it's starting to work or, hey, I got in at this thing at 50. It's now down at 46 and I'm long. Should I cut it loose? So definitely punch in some symbols. And, Ryan and I will be happy to kind of look at it. As part of what we do, because oftentimes there'll be an example or something useful that we can all get out of it. So again, we kind of look to you to kind of help to kind of add into this thing. Okay. So the agenda for today is as follows. As Ryan said, we're going to do a really quick overview of candlesticks here. Candlesticks are our alphabet. And so essentially, we'll kind of just give you a real brief 5-minute overview on it. And in fact, one of the things that we can actually do, Ryan, when we're done with this, if people kind of reach out to you after the program, Ryan can actually provide you a link of a webinar of the video that we had actually done recently. And I think it was about 30 or 35 minutes. And I think it combined two concepts. The first half was basically a good overview of candlesticks that will kind of elaborate on what I'm going to go through here in the next 5 or 6 minutes. And then the second thing it actually did was it went through the basic drawing tools that are in a trading platform or on a trading website where you can actually play with charts. Excuse me. They kind of go through pardon me. And I kind of go through the basic drawing tools of the ones that you kind of need to master in order to sort of effectively mark up charts. And it's no big deal. There's about 5 or 6 things: drawing lines, line segments, drawing circles, drawing a box, that kind of thing. And so I kind of go through that in the second half of the video. So those two, that one video of about 30 or 35 minutes kind of gives you a really good foundation for A, understanding candlesticks, and B, sort of setting you on the course of what you need to kind of learn, the simple things that you need to learn in your platform, okay? So Ryan will give you a tip on getting a hold of that. So today, though, we're going to talk a little bit about top-down analysis and kind of going through this progression here of the broad market, the sectors, all the way down to companies. And basically, we're kind of looking at, to some degree, aiming at to learn what's strong and what's weak. What we want to do, more or less, is basically, if we're going long, we want to look at things that are strong in the context of whatever time frame we're looking at. And then we're going to be looking for a reversal to either go long when something is strong, or if something is really weak in whatever time frame we're looking at, we're going to look for a little corrective rally, a little pop up into a key level in order to then short. And I'll kind of show you a couple of examples of that in a minute, right after I do the candlestick overview. But as we know, nothing goes up or down in a straight line. And so even if something is going down, plummeting, or even if something is going to the moon, there's always a little zig and a zag to it. And basically what we're looking for is when this thing is zigging up, we're looking for a little zag on a pullback in order to continue to go long. And obviously we're looking to do the reverse when something is weak. So we're going to kind of talk about that, and I'm going to kind of show you some examples, actually, that what came up in yesterday's trading that'll kind of be a good illustration of that. And then we're going to talk about kind of all of this stuff, and then sort of once you establish this sort of thought pattern, well, then how do you kind of mix that in, and how does that mesh with our plan? And we'll kind of go through that. And then we'll sort of then kind of go through, essentially kind of putting together some high probability trading opportunities. And and Ryan and I will kind of look at some live charts and sort of mark them up and see what we find. And then we'll also kind of talk a little bit about, and this will be, and this is definitely something we'll go through over. And all of this stuff we're going to see over the next few weeks. But basically the theory versus the practical. So once you have, and you've actually have all this stuff and you kind of mark up your charts, then how do you actually get to the point where you execute? And some of that's just mechanical. The notion, the idea of setting alerts, of kind of knowing where, you need to sort of, how to execute your trades. And we'll kind of talk a little bit about that as well today. And then again, going forward. And you'll see some examples of that when I kind of show you some stuff that I already have set up in the charts for today. All right, so that's kind of the overview here. So before I go on, as any of you have ever attended any of these sort of presentations, obviously this is all for educational purposes. We are not financial brokers or financial advisors or stockbrokers or anything like that. So this is all for educational purposes, and anything that we show you, of course, is really more to illustrate concepts. It's certainly not financial advice, okay? So let me show you, first of all, a chart. Okay, so this is, and we're actually going to talk about this and use this as an example of how we look at our trades. Okay, but of course you can see in here, these are basically made up of what are referred to as candlesticks. Okay, and the reason they're called candlesticks is, of course, if we kind of blow this up a little, and you look at these. Let's say if you look at this one right here, you can see it looks like, there's a body that's thick, and then there's kind of, this extension that sticks out on top. And of course, that looks like a wick of a candle. And so as a result, when the Japanese invented this in the 19th century, they referred to these as candlesticks, as do we. So that's why they call them. Okay, so what these represent are movements in price. And each one of these candles corresponds to a particular unit of time. Okay, so in this case, if you look in the upper left-hand corner of this chart here, it says 130 minutes. Okay, so that's basically a 2-hour chart. And I use 130 minute versus 120 minute for a particular reason. I use that, but I consider that to be the 2-hour chart versus 130 minutes. And it just really, because of the fact that the trading date exactly aligns with 3 of these candles. So that's why I use 130 minutes versus 120. We'll talk about that some other time. So at any rate, each one of these candles represents 2 hours of trading, okay? And what it's doing is it's showing you the relationship between where it opened, it's at the start of the 2 hours, the end of the 2 hours, and then the extreme high and the extreme low that it hit during those 2 hours. So let me kind of show this to you in greater depth here. So this is a blow up here of these candles. So what I've done is I've kind of shown, I have a green one here and a red one over here. So, and I also talk about this in the context of 2 different time frames. So a time frame represents how much time each one of the lifespan of each one of these candles covers. Okay, so in the case of this example here, I basically are presenting these in the context of 2 different time lenses. One is a daily lens, and the other one is a 5-minute lens. Okay, but these candles could look exactly the same. Okay, so what this represents in the case of, we'll start out with a green candle. Green candle, it represents, first of all, that this is the open of the candle at the bottom of this body. Okay, the solid colored part here, and then the end of, and then the top of the solid colored part is where it closed. So in other words, the time. So this is where it opened, And if this was a daily chart, this is where it would have opened at 9:30 p.m. 9:30 a.m. Eastern time, okay? And this is where it would have closed at 4 p.m. Eastern time, okay? So in other words, this is the opening price and this is the closing price at the end of the particular time span that we're looking at, okay? Now these extensions, which again we refer to as wicks, and really what traders tend to do is they call the top extension on top, it's referred to as a wick. The extension that's at the bottom is usually referred to as a shadow, okay? So this wick actually represents the extreme high of where the candle moved during the course of that day, okay? So this thing opened over here, okay, at the bottom of the body. It closed at the top of the body, but in between, it actually went much higher. It went all the way up there. And similarly, during the course of this day, when this thing opened, probably what happened is before it actually did all this upward movement, the first thing that happened is this thing kind of dropped all the way down here, okay? So again, there are 4 pieces of information that are depicted here: an open, a close, the extreme high, and the extreme low. That's a green candle, okay? The red candle is the exact opposite, okay? Where the opening price is at the top, the closing price is at the bottom. And then again, the same thing, the shadow depicts the absolute low, the extreme low, and the wick at the top depicts the absolute high, okay? And again, the only difference here is that the opening price on the green represents an upward move from open to close. The red candle represents a downward move from open to close. Okay, so so with any candle there are 4 pieces of information, in a sense 5 pieces of information. The color of the candle gives you the indication of whether you start at the bottom or the top, where the open and the close is, and then after that, each time the wick gives you the extreme high and the shadow gives you the extreme low. So if this here, let's say, was a daily candle, this daily candle would represent the open at 9:30 a.m. Eastern time, the close at 4 p.m. Eastern time, and then its extreme high and extreme high and extreme low during the course of the day. On the other hand, if this was a 5-minute chart, okay, well then, and I just would arbitrarily pick 10 a.m. as the start of the lifespan of this particular candle, then this would represent the open at 10 a.m. Okay, this would represent the close at 10:05 a.m. So again, each candle, when you're looking at a chart, anytime you're looking at a chart, the chart has a context, and the context of this chart is basically what sort of time frame you're looking at. Okay, so that's the point of all of that. So I'm hoping that will kind of give you at least an initial overview of how candlesticks work. Okay, and again, after we're done, like I said, Ryan will give you access to that video, and we'll also give you we'll send you a copy of the PowerPoint here. And right here, this is a detailed version of the thing that I just went through here. Obviously, I wanted to go through this because it didn't have the clutter of all the extra text in the chart. But when you get this, all of this will kind of go through everything that I just kind of went through over there. Okay, so that should give you kind of a good overview of candlesticks. And again, Ryan will make available the video. It'll kind of help get you the rest of the way there. Okay, so one of the things. All right, I'm sorry, Ryan.
No, I was just saying I'll definitely send that out to anyone who asks for it. And awesome. Mitch, just as a heads up, I already got some symbols from the crew. So when we get to that part or wherever, awesome. You let me know.
Cool. All right. So mercifully, that's it for the PowerPoints. Now we get to the fun stuff. Now I hate that. All right. So now we get to the fun stuff. Okay. So one of the things that we talked about, and in terms of how we want to, in a sense, approach trades is, and we've kind of talked about this, and we've actually done a series of webinars and other pieces and written pieces about this, is essentially more or less we want to trade with the current. It's always easier to trade with the current than against the current. And a current can essentially have a time frame. So you can be looking at a very near-term current, which is kind of, let's say, within the day, intraday, or you can be looking at sort of the bigger picture current, which is over a period of days and weeks and even months. And so as a result, depending on the style of trading that you do, you kind of adopt sort of a home time frame. And then at that point, that kind of gives you the lens in which to kind of look at the market and look at your setups. So what I'm going to do here is I'm going to kind of show you a couple of some different lenses, A, to kind of illustrate this point, and then B, I'm going to show you some interpretation of it, and then how that led to some trades both yesterday, some setups that I'm looking at, and we'll also even kind of use them to reflect off of the of the symbols, let's say, that some of you guys are popping in there. We can kind of relate it to some of that as well. So let me kind of show you. We talked about kind of finding the strong of the strong, the weak of the weak, and kind of what's hot and what's not. Okay, so what I've done here is, today's already Thursday, so because of the holiday, we're 3 days into the trading week. Obviously, normally we'd be 4 days in. So, but we're 3 days into the trading week here. So what I did though is what I do is on every Friday, when the week has concluded, I kind of, forgive the pun, I kind of take stock of where we are in the markets in terms of looking at the broad sectors. And the broad sectors are these things that we're kind of looking at right here: consumer discretionary, technology, communication, financial, health, materials, real estate, all that kind of stuff. And I'm sure, for those of you who have been around the block, you're certainly familiar with all those. So, and within the body of that, those concepts, there are the ETFs, the exchange traded funds, that are essentially the way that you can trade these on a broad market. In other words, you can actually trade the transportation index. You can trade healthcare stocks. And they essentially represent, of course, mutual funds, except more modern, much better versions of them. Okay. So what I do is every Friday, I kind of take a look at where we are in conjunction with this, because that sort of helps me to kind of figure out where the state of the market. So here's where we were. And let me see here. So here's where we were last Friday. So this is where the week ended. Okay. So what this is looking at now, this is what I refer to as a rolling month. Okay. So basically this represents 4 to 5 weeks. Okay. And what I'm doing here is I'm looking at the last 4 to 5 weeks of trading, starting from this particular point in time. Okay, and then you can see 1, 2, 3, 4. Okay, and then 5, and then this takes us down to where we are today. In an average trading month, if you look at a trading year, there's 252 trading days in a year. Once you knock out weekends and holidays, market holidays. And if you divide that 252 by 12, you basically have an average of 22 trading days in a month. Okay. So what I'd like to do, though, is I present this in a weekly format where I can see kind of each week how the price has kind of gone up or down on a percent basis. And that allows me to effectively rank the particular sectors. So I kind of know, well, which ones are the strong ones, which ones are kind of clumped in the middle, which ones are outperforming the market, and which ones are the weak ones. Okay. And so over the last 4 to 5 weeks, and the reason that I use this 5-week thing is it allows me to see the weekly swings. I could set this up like a 22-day chart, which was what I kind of described before about how many days are on a chart. But then you kind of lose this sort of weekly flow. And I kind of like to see these swings from week to week. Because one of the things, and it's kind of I'm sure a lot of you know this already, the market often has what you might refer to as the flavor of the day. There's also the flavor of the week. And a lot of times what happens is something kind of catches fire or kind of goes in the dumper over the course of a week. and it kind of stays that way. And so as a result, it establishes a tendency that you can then capitalize on. And then, but oftentimes what happens is the weekend comes, and then it's almost like going to the theater. The curtain comes down on the week, the next week comes up, the curtain comes up, and then we're looking at an entirely different set on the stage there. And to some degree, the sectors are kind of like that. Sometimes the sectors will kind of continue in that manner, but then other times, again, sometimes there'll be continuity, and then sometimes it's just things will be utterly different. Okay, so right here, over the course of the last 5 weeks, again, where we are now is the financials have been basically financials, real estate, and the utilities over the 5 weeks are overall the strongest of them, all being up between, let's say, 4 and 5%. Since from the 0 point at the very end of July. Okay. On the other hand, energy, in fact, is the only sector that's actually been negative. This is the 0 line right here, and you can see that this is the only sector that's actually been below the 0 line in negative territory, down about 1.5% as we concluded on Friday of last week. Okay, but here's an example of when I was just talking before about the of sort of the curtain of having Act 1 and Act 2 in the theater. Okay, Act 1 here was during this week, during that week in whatever it was, kind of mid-August, energies went into the dumper. Okay, and it fell about 5.5% during the week. And then what did it do the next week? It basically pretty much picked it up and got most of it back. So here it was the strong of the strong, the weak of the weak, and then the very next week it was the strong of the strong. And so what I have these charts to kind of help identify that. So again, over the rolling month, these are the strong sectors. Okay, the blue dots here are what correspond to. This is where the broad market is where the broad market is. So this is the SPY that represents the S&P 500, and the S&P 500 represents approximately 70 or 72% of the market cap of everything that's traded on American exchanges. Okay, so these are your strong sectors. That's your weak sectors for the rolling month. Okay, so now I'm going to show it to you for the week. So here it is now for the week. Okay, so before I showed you the rolling 4 or 5 weeks, the last week was last week's calendar week. Okay, from the 30th of August through September 3rd. Okay, so basically right there is the 0 point. Here are the 5 days of last week. So we can see real estate again, which was also one of the really strong ones for the rolling month. Real estate was obviously head and shoulders above everything else in terms of last week. Okay, so real estate was very strong, and then the financials, which have overall been strong, that was actually the weakest sector last week, joining energy. And of course, energy is just generally, as I showed you in the previous one, I kind of showed you has been kind of the weak one over the course of the last 5 weeks, and in fact, actually longer than that. Okay, so now this is the lens that we're looking at in terms of of 1 week. So first we looked at a month, 4 to 5 weeks. Now we're looking at a month, and then the last lens I'm going to show you is an intraday lens. Okay, and the intraday lens now this is yesterday. Okay, this was actually I got that label wrong. Sorry, that's the 8th. This was actually yesterday. Okay, so again, this was the 0 point at the end of trading. What is that? Tuesday. So this was the end of trading on Tuesday, and then when things opened up yesterday morning on Wednesday, here are the 6. I call it 6 hours. Again, I use a 65-minute chart rather than a 60-minute chart, because otherwise, if you use a 60-minute chart, you're going to have a leftover 30 minutes. So for me, I just like to use the 65-minute, and it breaks the day up precisely into 6 pieces. But I call that an hour. Okay, so it's a 65-minute hour. If anybody ever went to a psychiatrist, there's the 45-minute hour for therapy. We have the 65-minute hour for trading. At least my preference for that. Okay, so yesterday, and of course yesterday, there was some market weakness. There was sort of that flight to safety yesterday. So the utilities were the strong ones there. Okay, and on the weak ones, yet again, energy energy is universal in its weakness, whether it's over a month, a week, or daily. Again, the energy was weak, and then retail was also very weak. Was very weak yesterday, along with basic materials. So these were your three major sectors. These were your three primary points of weakness. These other things were obviously stuck in the middle here, and then up over here. And in fact, this was actually a great example of a flight to safety yesterday, because if you know anything about the sectors, you know, your speculative growth things are technology, and often, okay, so it's technology. But when there's a flight to safety, basically it's the utilities and the consumer staples, right? People need food, people need toilet paper, people need paper towels, people need the staples of life. And so as a result, these tend to be less volatile than some of these. So when people kind of get antsy about the market, there's a little flight to the consumer staples. And of course, there's the flight to utilities, because of course, it doesn't make a difference what's going on. You obviously need water and electricity and heat. So for all of those, yesterday was a classic flight to safety. Okay. So in looking at all of this stuff, one can look at this in kind of, you know, depending on what your trading style is, you can kind of look at it in two ways. You can look at it that, you know, let's say within the day, if you're a short-term trader, well, then you could look at perhaps one of these things, one of these sectors, let's say where, let's say the utilities were very strong yesterday. You could look for little pullbacks in the utilities in order to then get long when there's a little pullback and actually kind of then do a short-term trade in a short time frame. Similarly, on the flip side here, if something is kind of very weak, you can look for little corrective rallies in order to short something and take advantage of that downward movement. So let me kind of show you what we're talking about here, and then I'm actually going to show you an example of what we kind of did yesterday. So what we're looking at here is, and we're looking at this before. You can kind of ignore a lot of this stuff, pretty much almost everything on this chart. What I want to do though is show you what we're looking for in a chart and how it kind of steers us to trades. So again, you know, we remember what we said about the candlesticks before. So right here, this was a kind of a major down move here in this candle right here. Then notice that all of these two candles here are kind of clustered and kind of on trading in sort of a very narrow, sort of shallow range. And then notice this very, very elongated, big red candle here, okay? What this really illustrates is a point where price came down rapidly, it kind of went sideways, and then it dropped again with great energy after a very short time in here. Okay, these two candles basically represented approximately 2 hours of trading. Or excuse me, each candle represented 2 hours of trading. So as a result, this is about 4 hours of trading in here after this candle, the initial entry in here. And then right after this 4 hours occurred, okay, at the end of the day, okay, then there was kind of a thump down. Well, this might have been the beginning of the next day. I actually don't really know how this laid out. But the bottom line is after these two, you then had another major thump, kind of like a safe falling out a window, okay? So that's what that is there, okay? So that represents an area of essentially what we refer to as downward price pressure. And what really was going on here is that we had a meeting of buyers and sellers here. Buyers and sellers were kind of happily shuffling shares back and forth within this relatively narrow range here. And then right here, all of a sudden, something happened that caused all of a sudden this red candle to form. And what really happened was an exhaustion of buyers. All of the buyers disappeared. Okay, and as a result, the only way that these trades occurred is, or I should say, the buyers disappeared at this price level. Buyers were willing to buy, but they only wanted to buy at lower prices. And so the only way that these trades occurred was that the sellers who were happily selling to buyers up here all of a sudden had a decision to make. Either I'm going to sell up here or I'm just going to bag it and I'm just going to wait until price comes back there. But the ones that wanted to sell, they effectively ran down the price chart until they encountered willing buyers. Okay, that's what created this candle here. And this is an area of what we think of as of downward price pressure. And so when we see something of this structure, okay, what we're then waiting for is for the price to return to this level, because we expect, because of the structure here, that the amount of time this was here and sort of the energy and the length of this candle that comes out of here, we expect that when price returns here, we're going to see some repeat of this. Not literally a repeat in terms of it being symmetrical, but we're going to see essentially evidence that there's probably going to be another shot down if and when price got back to this level. So that's what the narrative of these levels what we're looking at here. And so if we think about this, we think of buyers as basically being the demand for shares. We think of sellers as being who have shares to sell. We think of those as the supply of shares. Okay, so we have demand and supply. Okay, well, if you ever took economics, we all know about the concept of supply and demand. And when demand and supply are in tune, you kind of get a place where things are kind of shuffling sideways. But when supply and demand kind of go out of whack, that's when you get sudden price moves either up or down. And so what happened here is the supply disappeared. The demand for shares over here disappeared. There was only supply until they ran down the price chart. Consequently, we refer to this here as a supply zone. Why? Because there's no demand left up here. There was only supply. And the evidence of that is that candle. That price went down and the sellers ran down the price chart until they found willing buyers. That's what happened here. Okay? And so as a result, when price came up here, that's what essentially led to we ended up with this kind of setup. And what we did was we formulated it so that you can either short the stock or you can buy a put option in order to then take advantage of a potential shot down of using options. But one way or either way, you're essentially trying to capitalize on the expected down move of there. Okay. So what I'm going to do is I'm going to quickly show this to you now in the platform. And so there was the thing that we were looking at before. Okay, again, the price came down, so went sideways. We had that shot down, and then this is what transpired starting on September 2nd. Price came up here, drilled into the zone a fair amount, and then eventually started to drop out of there. And then it actually kind of ticked back up to the very doorstep of this zone again. And then over the course of the last couple of days, though, it then went from basically down here all the way to down there. That's where we closed the trade out yesterday. Okay. And then you can see, obviously, there's been some recovery today. Okay. But again, we decided yesterday that we were going to close this trade. We kind of made about 23% on the option trade because the option we bought we got in at 985, and the option that we ended up selling it, we got out at 1210. So we basically made 2.25 on that. So that was represented a 2.5 at 23%. Return on investment for the few days that we were in the options trade. And of course, one could have obviously just shorted this thing. Obviously the amount of buying power that you need to do, obviously that's going to be an expensive trade. Obviously, you basically need $23,000 of buying power in order to, let's say, short 100 shares. We point that out over here. Okay, but anyway, that's the principle of what we're looking at. Okay, so what I'm going to do now is I'm going to show you from yesterday. So let me refresh your memory, though. All right, so here was, let's see, I'm going to show you again. So here was yesterday, and so here I showed you, again, retail was really weak, okay? And if we go back and look at the other time frames, we could see that, in terms of the weekly and that and that monthly, the rolling month, retail's been one of the weaker sectors. So since it was weak yesterday, we decided, okay, let's see if we can find some opportunities that will kind of take advantage of the weakness of retail, because we could see right at the open, this thing started out, and that was the weakest sector right out of the gate. Okay, and so after the first hour, we could clearly see that retail was the weakest sector. Okay, so that was the thing that then led me to kind of create and look at some setups that were going to take advantage of that. Okay, so these are, and in fact, before I do that, let me show you now something in your platform of what you can do. So depending on how you work, okay, first of all, these are all of the major sectors of what I kind of showed you here before, all right? So these are all those various sectors here. And so what I've done in my platform is I've actually set up in the platform, and you can ignore, there's a whole lot going on here. But the bottom line is I have each of the sectors here, okay? And then within the platform, I then have each of those ETFs, and then I have all the stocks that sit under the hood of those ETFs. So for instance, on retail, which is the thing that we're going to show you some trades on now, XRT, there we go. So this is the XRT ETF, and of course this is reflecting today. So of course everything is nice and green today because everything is recovering today, okay? But these are all the symbols that are part of the XRT ETF. And so what I used that, so basically what I did was yesterday, I used that as the basis for, we'll call it a local watch list for retail. And so what I basically did was I kind of just quickly flipped through these retail charts, and there was about 100 of them, or about 90 some odd of them. And so basically, though, I kind of have this thing linked up in my platform, and so that I can quickly flip through these. Okay, so that's what I kind of did yesterday. So after the first hour, the first 30 minutes of trading or so, once I saw how weak retail was. So what I did was I kind of then sort of started mapping out setups. And so, for instance, right here, this was, let's say, let's throw a line in here, right here. So this was the open from yesterday on the 8th, okay? So yesterday on the 8th, okay, price kind of, it kind of gave a little tiny pop in the very beginning. This is a 3-minute chart. So this is an intraday setup here, okay? So what happened was price kind of came up in the first, 15 minutes. And then, of course, it just dumped. It just kind of dumped with basically almost everything else in the retail sector, okay? And so right here, I identified this little area here of basically what I could refer to as downward price pressure. Price came down here. Notice that little area where it kind of goes sideways. And then notice again, remember before when I was showing you on that other chart, the IWM, which was the Russell 2000, when I showed you that level where there was the exhaustion of buyers on the 2-hour chart. This is an exhaustion of buyers on this 3-minute chart. Price came down, goes sideways, kind of really dumps out of there, and then it kind of continues then down there with 2 very bearish candles that kind of continue down. So this kind of gave me a clue that this was an area right here where this is where the buyers disappeared at this level. And since this was only in here for about 6 minutes, there's the expectation when price comes back there is still going to be more downward price pressure that's waiting to be tapped. It's just a question of, whether it meets our criteria for risk and reward and all that. And we'll talk about that in future sessions. Okay, but the bottom line is that was where the setup was, and price came up there, and we ended up kind of this thing very low stress, and ended up coming down here, and so that ended up being kind of a nice trade there. Okay, so that was okay, and this was what is that? KAS. So this is Kohl's Corporation. Okay, so obviously something in the retail sector. So I had found 3 other setups in there. Okay, so here's the XRT. This is the retail this is the ETF itself. So I had set this up. I wasn't in love with this setup. This was not a trade. As it turned out, if one sat through this the entire day, it would have actually worked. But there was for various reasons, I wasn't thrilled with this setup, and that's why it's actually marked in pink versus the official yellow that we use for essentially a fully qualified level. So that would have worked, but we didn't take that trade. And then lastly, there was a trade that, here we go. So this one kind of came back, and this one worked reasonably well. It got down to about 2-to-1 or so, and then kind of pulled back. And then at the end, it kind of closed off at around 2-to-1. Okay, and what this is this measures the entry point, the exit point. This is the point where we might get stopped out if things don't go well. And then this is the where our targets were. And then there was actually a fourth setup, and this was actually the best setup of all of them. And in fact, this might be like one of the prettiest setups I've ever seen. And of course, naturally, it didn't work, and we got stopped out on this one. But again, as an example, just because something fails doesn't mean that it's not valid. It just means that the market didn't agree with us, and so as a result, we take our medicine and we move on. Okay, but this was a great setup. Okay, price came down. We had this little area of consolidation where also we had these big candles that sort of come out of this range. But we notice we had all these candles that are much smaller. They have small bodies. They have these wicks, and they all kind of more or less go sideways. And then we had this thumb down of all this succession of bigger red candles. This was a perfect setup, except that it didn't work. It came up. It actually started to work, and then it just kind of sliced through. It is what it is. That's the market. That's trading. But again, this was a setup. So basically, yesterday we had three trades that we actually took on an intraday basis. One worked really well. One was kind of a middling sort of trade, and then this one failed. But and at that point, then this was our entry. This was our stop out, and we don't argue. The market didn't agree with us. And so that's what we ended up doing. So, so that was kind of the history. So the last thing I'm going to show you, and then I'm going to get into your symbols here, is here's what we're looking at. Because I showed you before, real estate is really strong. So one of the things that I'm looking at, though, on a sort of a longer term basis, let's say looking at daily charts and 2-hour charts, and for swing trades and for option trades, is now I'm going to be looking at the 2-hour or daily charts. And so as a result, these are some setups that we're now looking at in order to go long. We're waiting for pullbacks here in order to go long, where there's our entry, there's our stop out point. And over here, where on the previous trade, we were looking at the exhaustion of buyers before. Here we look at what we're looking at here is an exhaustion of sellers. Okay, so right here, on this green candle, price comes up. Notice this red one here, it kind of goes sideways. And then notice how price kind of rockets out of there with this larger green candle. Then there's another one that was a little minor pullback. And then it kind of just goes from there. Okay. And so let me just take the magnification off. So you can see right there. And then right here, this was actually a level here also. I didn't like it. As it turns out, it worked perfectly. Having said that, the risk and reward on this would have been about 2-to-1. So it would have been a reasonable trade, but my crystal ball was in the shop, and so since this didn't really meet my criteria, I just didn't take this trade. So anyway, though, these are other setups though that we are waiting for based on that criteria. Okay, so here is something looks relatively similar. Again, I'm waiting for a pullback here. And in fact, today, real estate is weak. So if we get a little more weakness over the next couple of days, we're going to presumably see pullbacks to these levels. And either this level or this level is going to be the origin of hopefully a good long trade. And then similarly over here, waiting on this one as well. Okay. So these are all setups that are based on that thing that I showed you at the very beginning, which was the how strong over the last week and the last rolling month, 4 to 5 weeks, how strong real estate has been. And now we're looking for pullbacks in order to then in order to effectively get long when these things pull back to areas where there was only a demand for shares at the price, but that the supply of shares at that price ran out. And as a result, if there's demand here and it pulls back, we can expect to see some upward price pressure, either in this orange level or in this yellow level below. So that's kind of our thesis of how we look at trades. That is sort of how we look at sector analysis in order to help us determine what's strong, what's weak, what's hot, what's not. And then what we do is we then look to capitalize on that by trading with the current, by looking for little corrections in order to then pull back to levels where we expect that tendency to then resume. Okay. And as long as the broad market kind of holds together, these things will, obviously work. And of course, they don't always work, but it works often enough that one can make a living at this. I just showed you that Chewy CHWY trade, which, like I said, is one of the prettiest setups I've ever seen on an intraday basis, and yet it failed. It is what it is. So at any rate, that's it. So let me bring up. Okay, so Ryan, why don't you throw some symbols at me here, and we can then, or if you want to dive in, whatever. But we can certainly take a look at some symbols here.
How about this? How about I'm going to share, Mitch, and if I have any computer problems, I'll give you back control, because I have a slight lag. I have no idea why, but let's just see if I can roll with it. Because
well, you know what you do. You while you're doing it, as they say, I'll play along at home here.
There you go.
So that if it turns out that you run into trouble, I'll be doing this stuff in parallel. How's that?
That sounds awesome. Perfect. So one of the guys in the chat, there was a question about the sector analysis, Mitch. I think it's not appropriate now. It's just like, how do you establish the zero line? So either write that down if we have time at the end. Maybe you can answer that. Otherwise, we'll put it into an email to the person who asked it. Okay. Sure.
Yeah, and I can take, but I can take 2 seconds probably. What symbol are you looking at there?
This is the ES.
Oh, okay.
Yeah, they label it differently in trading. Just about everybody else. But someone was asking about the SPY, but the chart is kind of like a disaster. So I popped up the S&P futures to use as opposed to using the SPY, which, they're going to trade kind of in tandem. You'll see here we actually went red. So what I was looking at when the market was green was right up here. I could see a potential, I don't know if it's going to stop the market, but I could see slowing it down right in here. So when price gets a little bit higher, depending on the entry and how quick we get there, because if we start rocketing, you'll notice the size of that candle in relation to all of them. Normally,
right. I like also, that. Why don't you tell people what time frame you're looking at there?
I'm looking at a 4-hour chart. 4 hours is like a perfect intermediate time frame level that I like using a lot, especially in the futures market. And it's very much like a daily chart, give you very similar information. But what I like here is that you'll notice here in that sea of red, there's that one green candle talking to you, right? And that's telling me there's a signal there. But you'll notice we've had the last 2 days have been negative, or maybe even I think on Friday was a negative day too. But we haven't had a full week of bad trading. So I'm a little bit cautious about shorting the broad market when we get these ginormous rallies. So right now, I'm feeling pretty good about taking the market short right there. If this starts to rocket in there, I don't know if I'm going to be willing to take it. But someone, like I said, was asking about the SPY, and I'm just substituting the ES futures here just because I think it's the chart's easier to read. The SPY chart's a little bit nutty. So if price were to come in here kind of leisurely, like instead of a rocket, do something more like this, where it takes the day, hopefully even happens tomorrow, and then comes in here, I'd be willing to take this short. But if it, like I said, if it rockets, I'm not interested. And then at the flip side, if the market starts to come back down, which you'll notice this is a very indecisive day, right? We've covered a lot of territory in, the last couple hours, the futures have been rolling. So if the market starts to dip, I would be looking potentially right below where that wick is here to get long too. Let me use this instead. The rectangle. Right in here looks like a potential. Now we gotta have to wait a little bit, but in here looks like a potential area to get long that I'm going to keep my eye on. And I already looked at the SPY. There is something analogous in there, but I really like that level. So we'll see what happens. Right now we're in the middle. This is a perfect day to, well, it's a really crappy here in Jersey, and I know it is in Chelsea too, Mitch. That this is a good time to go for a walk, do something else, and put one of these trades on or both of them, and just sit and wait, sit on your hands, and see if one of them gets there. But if this answers your question, Dave, about the SPY and what we're looking at, it's pretty indecisive right now, but you got 2 decision points on either side. I actually like when that happens because, one of these is going to get hit in the next couple of days and one of them is going to pay me some money. The other question was about McDonald's. So I already did the chart analysis while I was waiting, while I was listening to Mitch. And you'll notice here, I outlined like a little area that's been kind of beat up already, right? And now, why did I do this as opposed to just looking for like the next trade? Well, price isn't exactly rocketing through here. So since it's slowing down in here, this isn't done yet. So, basically what I'm getting at is that I don't think there is a decision to make just yet. It has to break through here before I can do anything. But if it does, and you're looking to go long, I do see something that's a little bit concerning. I think you were talking about going long, Dave. I'm not really positive. Let me take this off so it's a little less confusing. Is that if price were to rocket through or get through here, right? Which, there's a good possibility. We still got a couple hours left in the market. I think, a potential slow point might be this little area here. And I'll blow up the chart in a second after I put the rectangle on, right? Is that right in here may offer something where if we start moving in that area, I'd look to get short or buy puts, depending. I know they've got a couple option traders in here. So, I mean, I would eat. Sorry, I'm trying to get to the controls. And Mitch, you were just complaining about the Zoom controls, and they're in my way in this case. So,
I noticed that it's by custom.
Yeah, there you go. So where price starts to move here, right now it's not doing anything. But it's not unlike the ES where I don't really have a decision to make immediately. But if price gets up here, I can either look to take McDonald's short, which, to be completely honest with you, I'm not really looking to buy short the stock. I'm probably going to look to buy puts or do something else in here. But in here,
it's a daily chart you're looking at, right?
I'm actually looking at a 4-hour because I can't.
Oh, okay. Yeah. All right. So I'm actually looking at the daily here. Yeah. Basically, it runs from 242.71 to 245.41, but it's basically so level there.
Oh yeah, so it's probably incorporating that little red candle there too. Mm-hmm. So you could just pop this up to a daily, and you'll basically get the numbers Mitch said. But a really nice potential trade here. It's not there yet, and I'm kind of wondering. It's interesting that the last couple of days with these red trades, and we haven't gotten. We got a little bit of a move up today, right? But I think it's very indecisive. So this is where I'm kind of cautious and want to sit on my hands. Because, like I said, usually we've recovered from these red days, within 3 days, 4 days. Mitch, I don't know if you have a metric you've put on that yet, but you'll notice over the last year or so, these down days basically recover pretty fast.
Yeah, I mean, we've obviously gotten spoiled because we haven't seen a true correction. It's in the hundreds of days now. I can't remember. Somebody actually posted this on Twitter recently. I can't remember what the number is. But it's essentially, it's kind of needless to say, a long time.
This is someone used the language "Fed fuel." I only caught it out of the corner of my eye. I like that. I never heard that before. But the reason for the rally. But yeah, this looks like potential. I'm not even going to look to the long side because we would really need to drop, to get in there. And could that happen? Of course it could. But if I was going to go long, I would look at these ES level, that ES level. Which today might be that day. This is put it this way. I think, Mitch, we have a live one on what are we long? X on US Steel, which we can look at. This is not positive for that, but luckily we had that IWM set up that looked really good. And then just yesterday's trading was all around good for us. So anyway, that's what I was looking at McDonald's, Dave. And then I'll really quickly look at Starbucks. Again, I did the work already, but this is interesting. We're right there. On a 2-hour chart of Starbucks, you'll
I
notice
share the wrong screen. I was actually trying to share I was going to put up the daily level on this. I put the wrong one in there. But hang on a second. I'll put I actually have the daily level on the SPY. I'll put in there.
Oh, cool. Thank you.
The chat. Sorry.
Yeah. But you'll notice Starbucks basically recovered today. Here's the new candle that just came out in the last, little while. And now we're starting to head into, again, you'll notice that cluster of candles and then that big drop. I think Starbucks is going to have a hard time here. We'll put it this way. We'll find out if I'm right. I have a feeling we might find out today, but we'll see. If not, we'll find out tomorrow. But I think it's going to have a hard time getting through this 120 to, let's just say 122 area. It's really more like 121. But I think it's going to struggle in there. And we could see this correct all the way down to like 118, something like that. But hopefully that answers some of your comments, either questions or I don't know if you were just going long. You just put some symbols in, Dave, and then let me see what other is the last symbol someone. Let's see, chat. Let's see. MARA. Marathon Digital Holdings. Bum, 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 bum. Don't see much just yet. All right, let me actually start from the top and work my way down. I'm sorry, I didn't see who asked that, but I saw the symbol. So here we are in a daily chart. And what I'll do is I can do this. I'm going to go a little bit slower than I normally would. Normally, I wouldn't even look at, I would get right to what I want to see, right? So I do see up here, there's potentially something there where price just kind of came down. Now I have to go back and look and see if, nope, it's a good level. In here is giving me a little bit of pause where if price gets up here, I think it might struggle to get through here. And that's about like 43 to 45, right? And we're kind of sitting here in like I guess you'd say a messy zone of what Mitch was looking at before, where it's not the prettiest looking, but you'll see yesterday it basically fell right into here, right? Basically tagged the front of that around 37, 33. Touched. I don't know, it's a pretty solid trade, actually. I really shouldn't complain too much. It's on its way. Now, the broad market coming down is probably not positive for this. Because normally if the market was a little bit stronger, I could see this getting into that 42 area. Let me put the lines on because it's annoying me that I don't have price here.
Yeah, the broad market's going to probably be a drag on that.
I'm sorry, what?
The broad market's obviously going to be a drag on that.
Yeah. So if this worked out really nicely yesterday, but going long between yesterday's sell-off, today the market not exactly being strong, but kind of being indecisive. This is, you might have gotten the best of it today when it hit 40.25. And, normally these kind of recovered days, I could have seen this going to 42, maybe all the way up here, but you're probably going to have to hang on to it for too long. So I don't want to go too much lower in time frame because then we're going to start looking at, not the highest quality levels, and they're pretty low down below. If you want to talk about this privately, I'll put my calendar link in, Carolyn, and there's potentially something here I might look at, but it's so far away. I'd rather get to some other symbol people are looking at. So right now, in my opinion only, I think you might have gotten the best of this. We really need the broad market to recover, probably to drag this up into, let's just say 42. But right now I'd be cautious. When analyzing, do you typically include after hours? Mitch, you want to talk about the after hours trading a little bit? I have my opinion, but
absolutely.
Actually I got my opinion from you. So
yeah, well, the answer is no. The answer is I will certainly look at it. Let me go. In terms of charting, the only thing that Ryan and I chart when it comes to equities are the market hours. And the reason for that is, and I don't want to take the time to do this here, but if you just put up the full session that includes both pre and post market, and if you throw a volume chart underneath of it, you're going to see in terms of volume, it's around the error. It's a fraction. Yeah, you may have some like wild, trading associated with like, if Apple announces earnings after hours, but generally we're only charting during regular market hours, because that's when the institutions are trading. That's when all the volume is happening. And in fact, a lot of times what happens is wacky stuff will happen pre and post market. And like, for instance, if you actually have a stop in on a stock and you allow yourself to actually use pre and post market stuff, you can get stopped out on a trade. And then you wake up the next morning and you go, wow, I got stopped out. And you look at it and you go, it's exactly where it closed yesterday. And it's because overnight wacky stuff happened. And then at the end of the day, and then by the time the next day started, it was all back to normal again. So the answer is no. The only thing what I am a huge fan of, though, is pre-market. If I'm looking at a trade, and let's say, for instance, before I was showing you those real estate setups that might occur, let's say later this week or early next. If we get a little closer to that, I will actually turn on the pre-market, the pre and post market, particularly the pre-market, when price gets closer to those levels, because what's going on in the pre-market will give me a clue as to how the thing might open when the regular market hours open. And so as a result, that again, it gives me a clue, and it also lets me know, okay, is this thing going to be maybe even drilling into the zone? Is it gapping down? I'm going to have a good idea as to what the tone of the open is going to be for my symbol, and that's valuable information. So I'm not going to be charting the pre or post market, but I do use the pre-market leading into a potential entry for a trade for the reasons that I just gave.
Cool. Good answer. So if someone else put in DocuSign, and when I say, I'm sorry, I'm looking at the chat kind of quickly, and so if I'm not using your name, I apologize. But someone was asking about DOCU. So, it's interesting. It's the inverse of McDonald's, where price already beat up this level right here. You'll notice it worked like a charm. Now it's kind of sitting in there. More than likely, I would not take this as anything, and I don't expect this to hold. I do expect this just to kind of more than likely drift lower, not so much, just drop like a rock. But again, the broad market really is in control here, so we can check on that and see what that's doing. But that's okay, because if price does come down through this level, I'm fine with that, because I've got a really good looking level right here, right around that 253 area, right here. So very nice looking level where price you'll notice those two candles, they stayed there and then just rocketed out of there. So if price tends to come down here, I'd be looking to get long right there.
And that's actually a great level that's actually totally made for options, because it's actually a chunky level. It's about $6 deep. But you could, obviously, use a call on that intelligently, and you could do that with a lot less buying power.
And I don't want to get into like the nitty gritty of it, but like something like this, Mitch, where it's like that deep for, potentially selling puts, depending on what you're getting for them. If you're, if you're so inclined, that's a really nice level for that. Mm-hmm. But obviously we need to wait, and not even wait in the sense you need to sit here and watch it. There's two ways to do this, right? You can set an alert or set your trade up to, if you have the buying power, set the trade up now and wait and see what happens. But right now, this is a really good looking level. Like I said, I think we're going to drift lower just looking at the chart, and looking at this particular one, going back to this is not we'll see the market. Basically, something must spook the market. I don't know if we had, was anything today, Mitch, or is that tomorrow?
What's today? Thursday? No.
Unemployment claims, but usually that doesn't spook
the
market.
There was a number, I think, yesterday, I believe.
Okay. So the market's coming down now after, what looked like that, it looked like the initial steps of that normal recovery we've gotten after a couple of red days. So that's what I thought we were going to get. Right now, it doesn't look like that. We're about to head into the lunchtime doldrums. So we'll see what happens. Some of these times, that the market rallies going into the close. So we'll see what happens. But we wouldn't be shocked if today, now that we're getting this strong red candle, if we get to see entry on this. And I don't, if we're live, we'll talk about it. But if not, I will I will take responsibility for what I say here.
It's interesting though, because this is actually, it's a kind of a tale of two markets. Because I'm looking at the four major indices, the SPY, the NASDAQ, the diamonds, which are the Dow, and the IWM. And the IWM is clearly up today, almost like 0.7% or so. And everything else now is almost back to even after, kind of coming down. But the point is, they always, people kind of liken the Russell 2000 to kind of like a little kid or like the little dog. And it's sometimes that's the most nimble, and that's actually the thing that kind of leads the market. You can think of the SPY and the Qs as kind of like the Queen Mary, the Queen Elizabeth II, cruise ship. It's a mammoth ship. It doesn't just turn on a dime. The thing weighs zillions of tons, and just to make a turn, it takes several miles of ocean to do that. And so as a result, the IWM, that tends to be the move. So the fact that the IWM is actually kind of not up nice today, or I think that's probably fairly optimistic that these other things are correcting, but that's not showing that after it's recovering from its dump yesterday, which was obviously very profitable for us. But now that we're out of it, we can root for it to go back up again.
So let's see. Someone else was asking about DDOG. What is that? Datadog. Okay. Don't know that one. I have a feeling there is nothing to the left. I've never heard of that. And the symbol looks familiar, but I don't know if Mitch, you want to make sure it's not anything to the left there. I'll waste more time trying to get there.
What are you talking about? Long or short?
Short.
Oh, you're talking about on top of it. Yeah,
yes, on top of it. Current. Yeah. Thank you. It'll just take me too much time to load.
No. Sorry. I'll give it to you in a second. Let's see. Yeah, no, that's it's around all-time highs now.
Got it. Okay, so right now, when it's something that's sitting at an all-time high, no reason to short it other than just gambling, right? Could see a reversal, who knows, depending on the market, but I have no reason to just short this baby just for no reason. Now, if it does start to come down, I do see some stuff that we could potentially go long from, which gets kind of interesting. But let's play around. The daily chart is it's a little bit of a wreck. And I have a feeling, given that gap upward, is either an earnings gap or potentially a weekend gap just from eyeballing it. So I'm not a big fan of going long from those. But let me go back to that weekly and see what that looks like. I guess. Because right here.
Yeah, sorry, good call. That was an earnings gap.
Oh, okay, cool. Right here does look like our cup of tea, where price kind of came up, stalled out, and rocketed out of there. But this thing to drop $35, not quite, $30 to get into it, this is either going to take a while or something real bad is going on with the company that it takes a hit like that. A couple people know it. Our good buddy David says 5 years plus, great company to invest in. Okay, let's see. The volume profile on Docu shows 253 is the next support. How can I trade a short? Levels down to 253. Ooh, that's a good question. So, you're looking at, what are you looking at? Support 253. About 253 is my level, so that's perfect. So I reckon if you're asking my opinion, in my opinion only, I don't fade these usually. I'd not to say I never have. I just don't usually. And right now, just if this is beat up, uses it. What? Trying to think if I should answer this or not. If this gets below that 277 area, maybe you fade it and ride it down to 253. That's not what I do, and I don't know, Mitch, if that's something you do a whole bunch. So I don't really want to get too deep into that. But you could just fade it down either by buying puts, or if you're short in stock, short it down to that 253 area. Not my cup of tea. I really would rather just wait and see. I already have metrics for that. I already know what I want to do if it comes down to 253. I know I want to buy at 250. Let's just say 254. I know I want to put my stop at 246, or I know I want to buy calls at that area. Whatever I'm going to do, I'm prepared for it. Fading it not my thing. It's just, it's not quite gambling. I could put rules on it. It's just not how I trade. Mitch, you have some comment?
Yeah, no. It's in a sense, it's more speculative. The only thing I will say though is because I was, as I said, I was playing along at home here, charting this as you were looking at. What I would probably be inclined to do is, if one was going to be tempted to fade it, I would probably look for it to break out of. If you look to the left there, you see there's a little demand zone at around 265.50 on a daily chart to let's say like, I don't know, 260, 270. You see like on that.
I got it right here.
Okay. I would wait for it to take out the bottom of that zone and then maybe short it like around 265 because there is some sloppy demand there. It could bounce from there. Like I said, as you said, it's generally not my game either. But if I was going to short though, I would probably wait for it to take out that demand zone. And then you'd have a span between 265.50 down to about 254, which is that zone that you outlined.
And usually assuming you're using if volume profile lines up with what we're doing, I don't trade volume profile, and neither I don't want to speak for Mitch, but I know you don't really. So, but when anything lines up and we can get some kind of confluence, that makes me a little bit more confident in this level. So, what is the other? Which time frame do you usually determine supply and demand on? Okay, I'll give you my opinion, and then I'll let Mitch talk. So you could find it on a 2-minute chart. You can find it on a 1-minute chart. If you really had to, you find it on a second chart. I tend to right now trade 2-hour charts and above. So like 2-hour, 4-hour daily charts. Those are kind of like my 3 main time frames that I'm looking at stuff on. Occasionally I'll go to the 1 hour, occasionally I'll use a weekly, all that kind of stuff. But my bread and butter are those 3 time frames, the 2-hour, the 4-hour, and the daily. When I got started doing this, I was a pure day trader. I sat next to Mitch for years, and I was looking at 3-minute, 5-minute, 15-minute charts. And I remember thinking, why does anyone use anything other than these? Why do you look at a daily chart? Why do you look at a weekly chart? And I had gotten a conversation with one of my mentors, and he's like, you're trading just way too much. If you're using you can make the same money with less trades using, daily charts, 4-hour charts, all that kind of stuff. And, you don't have to do as much work. And I was like, oh, I don't have to do as much work. I always find that interesting.
That's compelling.
Yeah, it's compelling. Yeah, why don't I try this voodoo magic he speaks of? And I kind of never look back. I still, I never say never. I've taken trades the last couple of years off of lower time frame charts, but not nearly as many as I've taken over the higher time frames. They're just a lot more accurate. But if you force me to trade, force me to say I could only day trade, then I would be looking at lower time frames, and I could do it and make money just fine. But for my lifestyle right now, that's my favorites. Mitch?
Pretty much, I more or less mirror everything that you just said. The only difference is because of the fact that there are some subscribers that are into day trading. As I showed you before, I had those retail trades that I mapped out, and those are all based on 3 and 5 minute charts. But that was because. So, really to go back to that question that somebody had asked you, it's kind of like if you ever played poker and somebody asked you a poker question. Well, the answer, of course, is always, it depends. And in a sense, it depends on what style of trading you are, trader. But for my options trading, I'm really exclusively 98% either 2-hour charts or dailies. And once in a while, a weekly, if the dailies happen to coalesce into a weekly. But really, it's 2-hour and daily charts. That's really what I trade. But the cool thing about this whole thing is that it's fractal. And if you're familiar with the definition of fractal means basically it's a pattern within a pattern, and it's the same pattern over and over again. You might be familiar with that. There's sort of that classic pattern, the Nautilus shell. And if you're not familiar with it, Google it and just Google it. It asks for and limit it to an image, and you'll see what the Nautilus shell is. And it's basically the pattern of the shell makes up the bigger pattern of the shell, and it goes down, in several levels. So the supply and demand, it's fractal. It's the same thing. as I said, the charts that Ryan is showing you, you could just as easily take the label off of, and instead of it saying daily or 2 hour, it could say 5 minute. The same principles apply. In our opinion, the higher the time frame, the more valid the levels are, because institutions are what drive the market, right? It's not me, it's not Ryan, it's not going to be you. We're all just little droplets, so little minnows in the pond. The whales are the institutions, and the whales and the institutions, they're not trading 5 minute charts and 3 minute charts. They're basically trading daily and weekly and monthly charts. That's what's driving that's what they're looking at, these bigger picture tendencies. And when they're moving zillions of shares, they're not working off of a 5 minute or a 15 minute or even an hourly chart. They're looking at big time frames because they're moving big money.
Yeah, I agree. Asked about Asana. Same deal here. I'm assuming this is at a new high also. So I don't even need to look because it is only public not that long.
What's simple?
So ASAN. Yeah, I mean the chart. Wait a second.
Yeah, you're at highs.
Yeah, I mean if we do this, this is going red. We're still a decent distance away, but if this does start to come down, it's got a long way to go to get to my entry. What I'm looking at, but right below 90, right in this little guy here. I would be looking to get long. So if you're inclined, you could clean this up a little bit. Yeah, right around 89, closer to 89 than just below 90 when I adjust. So 89.27. And I would put a stop somewhere around 87, 81, give or take a little. But let's look at the broad market. Still red. Still, not really deciding to. It's probably just a drop in the bucket. I'm not sure that I don't have the percentage on here, but if we stay red, I could see this dragging down a couple other stocks like that, like this. That's a far distance to go. That's almost $6 today. Now, let me give you a caveat. If this does drop this much in the next couple of hours, I will not be in a rush to take this long, put it that way, because it could be catching a real falling knife, and I consider myself good at catching a falling knife. There is a difference. There is such a thing as just calculated risk. So if this were more get closer today, an ideal situation is, it starts to make its move down today, opens tomorrow closer to the zone, gets entry, and hopefully we can get out in the same day, because carrying over the week. If I'm using calls, never mind. If I was using a call, I'd be willing to carry over the weekend. I'd be a little bit more interested. But right now, nothing to short it. It does look like it's starting to make its way down, but no real reason to do anything with it right now. We're just kind of more of a wait and see. Let me see what the other comment was. I saw another chart. Saw FL. All right, we'll look at one more of that. And I just saw a name in here who's real quiet, Mitch. Not throwing symbols in here, not asking questions. I don't know. It's very strange. I wonder if he's Amit Nar.
I've heard of him.
And FLYW, sorry. Let's see. Flywire. Yeah, I mean, same deal here, and the chart's kind of, let me go to the daily. I mean, so prices here, we're right in here is something I'm not thrilled with that move away. It'll do, meaning that when I put the bottom line on here, I'm not really looking, that move out isn't exactly the length I want it to be. So it's kind of like a mediocre trade. Not to say that it can't work, just that it's not my trade, put it that way. I would really prefer this gone a little bit further. So not for me. And I think I'm assuming just given all the ones you're there's some consistency with what you're looking at. I'm assuming this is also at new highs. So nothing really. This right now is holding against the market, so that's good. So getting an entry on this anytime in the next day or so would kind of wait and see. And I don't particularly like this. This is like one of this is probably the least liked level I've seen, which means it's going to work. Go to the moon.
Oh, it was like that showy setup that I showed you before. That, like I said, wouldn't you agree that was like a kind of a textbook setup?
It was the most beautiful level you showed of those four.
Yeah, and just failed. Whatever.
Yeah, it is what it is. Yeah. I think that we ran the gamut of a bunch of different symbols. And kind of one thing I would take away from going through, we went through a decent amount of symbols, I think, is you'll notice I popped those levels up inside of 30 seconds each chart, probably, maybe a minute. And we found something of various quality on every symbol. That's pretty cool. Mitch, do you have anything to say about all the
No, except I think just to amplify your last comment, you found some stuff that's quality, but when it comes time to actually consider execution, though, they all need to be weighed in the context of the broad market. Because in a sense, you could have something that kind of looks, it's may even be good quality, even great quality, but if it's totally counter the market, or even let's say it's sector, okay, let's just say you may be looking at a communication stock, and the communication ETF is just in the dumper, and the communication ETF may not be reaching its own level, then you might be sort of playing with fire, looking to go along with the individual stock, because the broad sector is kind of may not be ready to turn. So in a sense, one of the ways to sort of help to give some context, as well as to kind of stack the odds in your favor, is to kind of look at both the sector as well as the symbol itself that you're trading. So just to amplify what you were saying.
Yeah, I like what you said, Mitch. I'll do one more symbol, and then Mitch, if you would want to do a brief explanation on the zero line thing, because I would prefer to have that in the recording. That would be good.
Sure.
Of how that's.
All right. So after you do the symbol, give me control back, and then I'll show.
You got it. And so Amit's looking around 395. So I guess right here. So you found it on a 65-minute, which is right there. Someone taught him what he does, Mitch. Right in here is probably your 65-minute level, and you were looking around 395-ish. So right in here, yeah, that's pretty solid. I like that. We had a nice move down, price paused, and just rocketed out of there. That's pretty solid for either an options, whether you're selling options, buying them, and if you have the buying power to buy the stock, good for you. But I would look for an options position right in here around that 390. I'll throw the lines on for the video in case we send the replay. Go. 396. I can pull that tighter. Yeah, around 395, 390. Pretty solid. And again, holding against the market. When you drop it to this time. Yeah, no, I'm sure, but I'll just leave it be for right now, so I'm not flipping through a million time frames. So before I end on and turn it back to Mitch, we looked at a bunch of charts. One or two of you asked about some symbols I couldn't get to, or I thought were not appropriate to give full analysis. So like Mara, I think Carolyn, you asked about MARA. What I was looking at, I will put in a screenshot in an email to you and show you what I was talking about. And then if you want to discuss it, I'll put my calendar link in there and we can talk then. Mitch, I'm going to stop sharing and let you do it. Just give me 1 second. All right, all yours.
Awesome. All right. Okay. So here's the screen. Here's my platform of what I was using to show you guys before those sector analysis screens. Okay, and each one of them corresponds to a different time frame. So this is the weekly one. This is the one that corresponds to that rolling 4 or 5 weeks. This is the daily one that corresponds to the intra-week one. And then this 65-minute one, this corresponds to the intraday activity. Okay. And so the way these are set up is, okay, first of all, they are all based on a percentage change chart. Okay. So rather than looking at the absolute price of all of these instruments, what this is based on is their percent change move. And of course, the reason for that is we want to see how they're moving relative to each other. And then just as a matter of practicality, if one thing is selling at 75 and another thing is selling at 250 or 300, well, then trying to get everything on one screen is just a nightmare because of the difference in scaling. So for all the above reasons, but really the main reason here, of course, is that we care how do they move relative to each other. So how does this happen? Okay, so the first step that you have to do is you actually have to tell the platform, express the trade in a percent change manner. Okay, so once you have so what you need to do is you insert all of your symbols into one chart and tell it to basically show all of your symbols in the same chart. In other words, you don't want to have one stacked on top of the other. These are all sitting in the same chart. Okay. Okay. Once you've done that, though, you then have to tell the chart, rather than expressing this in price, you express it in percent change. And depending on how your platform works, basically what you need to do, though, is you have to find where the control is. So here in my platform, it's style. And if I go down to style, okay, and it says, okay, percent change enabled. So now I've turned on the percent change. So now we got the percent change going. So now you have to decide, okay, where am I going to measure the percent change from? Because obviously you have to establish what the 0 point is. Okay, so what I wanted to do, of course, is for this particular one, which is the intra-week one, I'm looking to basically establish the 0 point at the close of Friday. So that here's the first day, and of course, because with the fact we have Labor Day, so here's the first day, Tuesday, then there's Wednesday, and now here's today. Okay, so that's Thursday. Okay, so the 0 point is Friday. So the way it works in TradeStation, and again, obviously everyone's platform is going to be different. So what I'm going to do here, though, is I'm going to screw up this chart for a second, and I'll put it back. So what I'm going to do here, though, is I'm going to set this thing up to make Thursday the 0 point rather than Friday the way it should be. And the way it works, at least in TradeStation, is you basically just kind of click on the day that you care about. In other words, put focus on the place, and you can see, you see these dots that get created? These dots represent where the actual data is. So if I click on that, and then I go back to the settings, okay, and you see where it says percent change chart, it gives me a choice. And it says calculated from the first bar, which is literally the first bar on the chart. So if this thing is showing like 2 years worth of data, it's going to go back 2 years. Obviously, we don't want that. Then the next choice is calculate from the last bar. In other words, it would set it up right here so that anything that happened going forward in the day, our 0 point would be here. Well, that's not what we want either. But the last thing we want is calculate from this bar. And so what we do is we establish what this bar is. And what we do is, again, give focus to this region, which is right there. Okay, which is, you can see on the bottom, if you look at the time axis, that's September 2nd. Okay, we then tell it, okay, now calculate it from this bar. We click on it. And with any luck, there's our 0 line. And you can see it's this kind of this thin red line. And so what I typically do, particularly when I do a presentation, is I will then I will kind of create my own line, and I'll just overlay it because it's just clearer, and it's also got a date label on it. So now I made the 0 line here versus here. Okay, and you can see, obviously here the consumer discretionary is sitting here up on the top. If I now put this back where it belongs, And now we're back to the third. Okay, so consumer discretionary is still up on top. But, the relative positions of all of these, though, have in fact changed, because here is the zero line here, and that's the zero line over there. And it's the same process, obviously, if you're going to go through this. Now, of course, on the chart that I just showed you, I would do this every day. This one, I only have to do this once a week. Okay, basically either on the weekly one or the intra-week one, I only have to do this once a week. Okay, so come Friday, when Friday happens, I'm going to then move the 0 point from here. I'm then going to move it there. And then, of course, then I'll change the labels and all of this. So this would be the week of, August 16th, ending the week of September 15th, blah, blah, blah. So I just change all of that. And again, this would be the location of the new zero line there. Okay. And then, of course, similarly, I would end up doing that same thing of course, for the intraday one as well. Okay. So when this day is over, and we end up, so you can see right here, this was 4 o'clock yesterday, and that was the zero line for the intraday chart. And then once the market closes today, I will obviously then take that and move that over to 4 o'clock today and reset the zero line, and I'll be all ready for tomorrow. So anyway, that's how that works. So I hope hope you can follow that. Like I said, you'll just have to kind of figure out how to do that in your platform. But that's the general principle of how it's done.
Cool. I'm glad you do that, and I don't have to.
It's actually once you have it set up, it's actually easy. The biggest pain is, when I was setting it up for the colors, and I kind of have the bullpen of all the labels here and all that kind of stuff. All of that took time. Needless to say, I've made about 5 backup copies of this thing, so if this thing ever gets corrupted, because this was a real bear to set up. But once it's set up, basically you just have this. You have this. So, and in fact, if you guys decide to do something like this, what you want to do is, first color code your lines, and then come up with the labels that will match up. Match up the color codes of the lines, and then this way, once you start to have it, you can just go, okay, all right. So there's retail. There's your strong one there. There's your real estate. There's your materials. Okay. And anyway, like I said, like a lot of things, the work is setting it up. Once it's up and running, no biggie.
I remember we were given a presentation once, and we were using that the famous Tesla chart from with all the crap on it, and you're like, I never use a spaghetti chart like that, but here's one type of spaghetti chart.
This is the only spaghetti. This is the only
one I know of. Yeah.
No, because there are other ways to depict this information, but like if you go to stockcharts.com or barcharts.com, they actually have something where it'll present sort of like a bar chart of this thing, but it's static. This allows you to see the ebb and the flow, and I think there's a benefit to that. Particularly like if you establish a thesis that intra-week, you think that there's something going on. Let's say on Monday, you establish a point of view, right? Tuesday and Wednesday it holds. And then all of a sudden something happens on Thursday. If you're looking at something on a static basis, you may not realize it. But all of a sudden, let's say retail goes down by 0.25 or something, but everything else goes up by 0.5, all of a sudden this is going to change. This helps. Seeing the ebb and the flow is valuable, as opposed to seeing this stuff in a static sense. So anyway, again, hope that's useful. And if anybody ever runs into any problems with this, obviously let us know. We're happy to go through it again.
All right, cool. I think that was cool, Mitch. I think we can end here. And I told everyone I will email out any kind of any images you want, Mitch, like slides or whatever. And then I will also include the replay. So that's probably going to be later today. I'll get that out. I'll include our email addresses, calendar links. So if you guys have any questions, it's probably easier just to get on our calendars and give us time to, we can set time aside to have a conversation. Forward the email there in addition to your, okay, thank you. No problem. Yeah, I think that's it. Mitch, any parting words?
Oh, awesome. But thank you for joining us. And like I said, we'll be doing this. We'll be doing this weekly.
Cool. All right. And yes, Dave, I will forward Mitch the email you sent me. All right. Have a good one, guys. I appreciate everyone showing up, and I'll look to talk to everybody soon. Mitch, have a good one. Talk to you in a little bit.
Okay.
All right. See you, everybody.